pattern that I had wasted half of my trading career ignoring and neglecting were simple trading channels. But what I came to realize after years of trial and error was that channels are in fact the pillar of successful technical analysis and the bread and butter of all setups in day, swing, and scalp trading. From the daily to the 1 minute on every single asset at any time of day, price is always inside of or breaking out of these trading channels. The sooner you can accept this as fact, the quicker you will be able to profit from locating and plotting these channels on all of your charts and time frames. Not only are channels themselves the perfect opportunities for taking trades, but they are also the key indicator for showing where price is going to go next, which allows you additional trade setups inside of and breaking out of this setup. At the end of this video, I want you to open your charts and zoom all the way out to the monthly. Begin plotting channels onto the monthly and continue this process through each and every time frame, all the way down to the 1 minute chart, whether you trade that far down or not. The purpose of this exercise is that I want you to visually see how abundant these channels truly are and really understand what it means when I say that price is always inside of and breaking out of a channel. One trick that I want you to use as well is to color code channels by time frame. For example, I typically code the monthly and weekly channels in orange, the daily and 4 hour in blue, and then the 1 hour in yellow, and so on. What this does is allows me to see which channels belong to which time frame without having to zoom out to see the bigger picture. If I am trading on the 5 minute chart, I know that an orange trend line is from the monthly or weekly channel and therefore holds significantly more weight than a shorter term channel in the 5 minute. So how do we utilize this pattern in our swing trading? The first step is to zoom out and focus on the monthly chart as we analyze this time frame, looking for larger scale channels that might give us a hint as to where price is most likely going to head next. Even though we are not trading the monthly time frame, what we are looking for are any hints or clues which will show us the most probable rotations and where price is likely to go over the next coming days or weeks. With any luck, we can find a channel in which price is either reversing inside of or breaking out of on the longer term time frames. Once we have analyzed the longer time frames, we can then take a more detailed look by opening the daily and 4 hour time frames to further identify additional channels that might reveal a more shorter term projection of price. Again, seeking out channels for reversals and breakouts. We will then be able to match up the longer term channels from the monthly and align that direction of rotation with the channels on the daily and 4 hour, ultimately giving us the highest probability of correctly forecasting the future direction of price. In the instance of a trade short, what we are most interested in is locating price that looks to be rotating down on the monthly channel, and then additionally locating a down rotation on the daily or 4 hour channel. Once we have two or more markers converging on similar directions of trade, we are then able to make a stronger conviction for the true overall direction of price action. This will lead to higher probability trade setups and more winning trades. One key point here is that one single reason alone is never enough in trading. The stronger the case you can build as to why price should move in one direction, the higher the chances of winning the trade. Multiple indicators to short a trade will always outweigh one simple breakdown. One trading hack that I want you to use in this strategy is to identify reversal patterns occurring at your point of interest in order to confirm the breakout or reversal of this pattern. Reversal patterns can come in many different forms or shapes, which include head and shoulders, double tops, or even simple pin bars, all of which are indications of indecision in price action and will typically signal a potential reversal in price. When paired with a significant point of reversal, these reversal patterns will often signal to us the exact moment when a reversal is actually occurring, making them the perfect indicator for telling us when to enter the trade. Now there are a few points that you need to be aware of, not only for trading this setup, but also for any trading in general. These are tricks that are typically realized only after time and money are spent trading, so begin to implement them now before they cost you any more money. Number one is that all setups need to be traded with patience and discipline. Most traders don't realize that the most valuable attribute that any successful trader can possess is patience, and this point cannot be stressed enough. Allowing setups to fully develop and waiting patiently for the reversal pattern is going to provide you with more winning trades than any individual setups, patterns, or indicators ever could. The ability to sit on your hands and wait for the disciplined trades to occur is literally the key to your success. Ignore the FOMO and focus on being late to the trade. Always keep in mind that missing out on a trade will cost you $0, but entering early and being stopped out will cost you the maximum losses in most cases. This is a very expensive way to learn and detrimental for beginner traders. The second key point is to always wait for confirmations before entering a trade. This applies to channels as well as any other setups or patterns that you can think of. Confirmations are one of the most important concepts for a trader to master. Always remember that a head and shoulders doesn't actually exist until the neckline retest has been confirmed. Everything that you trade should have a retest confirmation. If you're breaking below support, wait for the retest confirmation before entering the trade. A double bottom, first allow it to break out, then retest for a confirmation. Never enter trades without the retest to confirm that the pattern is actually holding in true. Doing this will save you from countless fake outs and losing trades, resulting in a significant shift into net positive trading. If you found this video helpful and would like to learn more, please feel free to check the links in the description for additional material and strategies. I wish you the best of luck in your trading, and please consider saving this video in your trading folder, as more information will become more relevant to you as you continue your trading education. And most importantly, remember that patience and discipline are your two greatest assets in trading. Focus on those first, and you will see a drastic improvement in your profitability no matter what setup you are trading. Good luck, and I'll see you on the next one.